We move on to the third session of today's Invest UAE. We're looking to explore how the UAE's low corporate tax rate of just 9% is able to position the country as a frontrunner in enhancing global competitiveness for both local enterprises and multinational corporations. The corporate tax system in the UAE has significantly altered the business environment and also the country's economy. It's raised the quantum of regulations for companies to comply with, but it has also broadened the economy, drawn in foreign capital, and improved the UAE's standing as a trustworthy and transparent commercial hub internationally. And even recently, it improved its position in the IMD World Competitiveness Ranking by 3 spots to 7th place globally. So with our next panel of experts, who I'm sure all have some advice and opinions to share, we are looking to leverage off their success to help you discover the strategic implications and potential growth opportunities stemming from the new tax regime. So welcome on stage, Nirav Shah, the Director of Fame Advisory and the man who also wrote the book on UAE taxation. Sahil Mehta, the CEO of Shura Tax Consultants. Please thank Mustafa El Rafay, the General Manager of Integrity Accounting Services, Alaya Noor, the Associate Partner of Ahmed Al-Ghabani Chartered Accountants, and Josefa Saifuddin, the co-founder and CEO of the Brooks Group. A round of applause for our panelists, please. It's great to have them on here. Nirav, starting with you, I know you are vastly experienced, having been here for a lot of time working in accounting and also working as advisory. In your opinion, how does the implementation of corporate taxation affect economic activity? How does the new tax system make the economy more competitive?
Thank you, Kish, for having us on the panel. Any compliance, first of all, enhances the reputation of the jurisdiction. And that's what is helping UAE gain its attractiveness of doing business index and ranking as well. Pre-corporate tax and pre-VAT, there were practically no compliances here for corporates. And therefore, people could do whatever they wanted. Now with at least this basic level of compliance at a very attractive rate, changes the entire perception of the country from being a tax haven or tax attractive jurisdiction to a tax compliant jurisdiction. And that is very relevant for UAE in terms of attracting new businesses to come in and set up here. Since last 1 year, there have been multitude of inquiry by a lot of multinationals, family offices and all, who were earlier not considering to be in UAE, are now preferring to be here and do business here. At 9% is one of the lowest rate in the world. We might have probably 2 or 3 countries which are below this rate, right? And a very holistic tax system which covers all aspects and a very simple to administer. Of course, there are nuances when it comes to free zone and transfer pricing and few others, but that will remain in any tax law. But overall, when you see the construct, it is very simple. It will be simple to comply also. And therefore, it is helping the country improve its ranking, improve its perception, and ability for people to be attracted to doing business here. And along with the geographical location of the UAE, ease of doing business overall, with this new compliance being introduced, is nothing but helping it to be positioning it more strongly to do business here.
Thank you very much, Nirav. Sahil, in your work as a tax consultant and your experience with the economy, do you think this move was primarily based to move the UAE's economy beyond oil, or was it also about having more accountability for the businesses that are here? Are we on? Try and it should be on. Do you want to maybe just pass the mic down, Mustafa? Oh, okay.
Good afternoon, everyone. Thank you for asking this question. I believe it's a part of a broader strategy, if you ask me. It has to cover the economic diversification where UAE has predominantly been into oil and gas sector. So to reduce the dependence on those sectors as well as fiscal accountability, right? So when I speak of economic diversification, we know that UAE has predominantly been in oil and gas sector. Now, over the past few years, and the oil prices have been quite volatile, right? So the dependency of those sector will be quite volatile in coming time. So it's better that UAE take this stand and move its focus to the non-oil and gas-based sector like tourism, technology. Now, when I speak about fiscal accountability, UAE has broadened its tax base where it's ensured that the corporations also contribute to government revenue. Definitely, this will strengthen the fiscal base for UAE, as well as create more transparency in public finance management. Lastly, I believe it's also a part of global integration, where UAE wants to participate and match with the fellow competitors in the market and match in the international standards. So I believe that's the overall view with this shift.
So it's really not one aspect, it's a combination of all of them.
Absolutely.
Yeah. Mustafa, you're working with Integrity Accounting Services. We've heard about this move to change from the oil economy, the transparency, the stability, all that compliance. What has been the reaction globally to the introduction of the new tax from other markets outside the GCC?
Well, thank you very much for having me here. First of all, introduction the corporate tax in UAE, it's something I'm sure will help the transparency and giving the advantage of UAE across the worldwide, since it's the lowest rate, as everyone mentioning this. And having transparency in the country will develop a lot of things and attracting the investors to come here, because with implementing the corporate tax, everyone will be required to get complied with having bookkeeping, proper bookkeeping, financial statements. So I'm sure this will help a lot of investors and give trust for all investors and transparency across all the sectors. And so I'm sure this will help a lot of companies to get compliant, but this not in the short term, of course, because most of the companies here, the SMEs representing more than 85% of the companies here. So it's not easy to get compliant with all of them. It will take time in the long term. So
there's often got to be, for everyone to introduce the right due processes, there's also, I guess, got to be a lot of leniency for businesses that are struggling day to day anyway, that now they suddenly have to adapt to this new legislation.
Correct.
Yeah.
You have to do anyway. Yes, that's correct.
Thank you, Mustafa.
Thank you very much.
Thank you. No, Alea, did you want to add something, or you just? Oh no, he was just more saying, I guess, about the challenges that are that. Yeah, we do know there is a lot of echo in the room. It's not the most soundproof room, but that's why I want to hear, Alaya, about your thoughts, because we know the 9% with the introduction of the tax, suddenly for a lot of businesses, 9% has been taken out of their bottom line. Have you seen many companies in the UAE innovate and perhaps diversify to try and, to try and make up that shortfall now that 9% will be going out of their business?
Can you hear me? Okay.
Yes, we can.
Mr. Kitch, there is a problem with this question. That's the interesting part. 9% tax doesn't make businessmen to think of a new source of income, because the higher your income, the higher will you have to pay the tax, because the tax will remain 9%. So the question should be that most of the businesses are asking us how not to pay tax. This is the question, how not to pay tax. And there are 4 types of categories of businesses. Number 1 are angry birds. They come to us and they say, UAE was supposed to have no tax. Why there is a tax? And I am a small business. I will not pay tax. Then we tell them, okay, don't earn too much. Chill. Don't reach 3 million. For 3 years, just make 2.9 million. After that, go on vacation. Stop the business. Then you can avail the small business relief. So you don't have to pay tax, because the taxable income is supposed to be 0%. Now the second category, these are called Aladdins. They are the sole proprietors with a lot of money. And they have a lamp, and they suppose that we are the genies. And they come with 3 wishes. Number 1, I want to reduce my profit. Can I withdraw salary? We said, no, sir, you cannot withdraw salary. Wish number 2, okay, I'm working so hard. So why can't I have some bonuses? I said, sir, you cannot have bonuses. You're a sole proprietor. You cannot have salary. You cannot withdraw cash. Then the third wish, if they ask third wish and we are not able to fulfill the wish, then we will be kept in the lamp. So we tell them, ask us for a wish for exempt income. So they are happy. We tell them, invest in local companies. You will get the dividend, then that will be exempt. Then they are happy. The third category is mirror, mirror on the wall. Who's the smartest of the all? And they come with us. They are the companies with cross-border companies. And they ask us how not to pay tax. Then we tell them, okay, do the restructuring. They ask us, we have qualifying activities, so which zone should we move? So we can avail the 0% tax scheme. These are the fourth category. They are doing the restructuring. They want to switch their companies from one free zone to another free zone, or either they will segregate their business activities so they won't disqualify from the de minimis requirement. The fourth category is do or die. They come to us, how do we save tax? We don't want to pay tax. Okay, can we split our business? I will split the business and open the same business in my wife's name. Say, no, sir, this is ND abuse. You cannot do that. Okay, so I will get this company liquidated and then I will start a new business. Sir, you cannot do that because for liquidation, first you need to have registered in corporate tax. And then you can liquidate and then you have to deregister. And the FTA has all your data in Amara portal. So there is no escape. So they are not earning any other source of income. Instead of that, the question is how not to pay tax. Thank you.
Aliyah, it sounds like you're the tax genie. Yeah. And we could see a children's book the way you're able to adequately describe that information. Thank you. Thank you very much. And I guess that is a challenge, and we can open that up later on because I do want to hear lastly from Josefa, because this idea that a lot of people come from countries that have got existing tax, and therefore their cultural thinking is, how do we minimize our tax? You know, that's quite a regular thing in a lot of countries. And I think that's probably, again, what you're chasing. Oh, we've got tax, how do we minimize it? Josefa, is that something you're finding as well? One of the first questions with business, that they go, oh, 9% is going, how do we reduce it?
Good afternoon, everyone. So I believe that's the question everybody is asking for, how to reduce their tax. I think the more focus which Ms. Alia has already focused right now on is that how to be better compliant at this point of time. Because tax is going to be staying here forever now. It's not going to be for only a short period of time. So being more tax compliant, understanding the tax better, accepting it as your compliance or your part of your business cost would make your business much better. And as she mentioned, that people do not need to look into other revenue streams, but I personally feel, that's my personal opinion, that people are going to become more creative in looking out for more revenue factors when they have to adjust this cost of compliance into their books of accounts.
Yeah, it's exciting, and maybe a question that we can ask everyone openly, if you're free to comment on. In your experience working with businesses, what are some of the mistakes or challenges that you found businesses are getting wrong when it comes to the implementation or getting ready for audit?
I'll just take this question. So when we talk about mistakes, there are no mistakes. Every business learns through the process. UAE definitely never had compliance prior to this, and if you see last 5 years of history, UAE has been adapting world compliances at par. So I believe, as I said earlier, compliance is going to stay here. People are looking into innovative ways to look into their business profiles, as well as doing their bookkeeping or accounting in a much better way. As one of the speakers did mention that people were about to do anything they wanted to do with their books of accounts, but now giving us specific standards through, people are going to be more focused towards looking into their books of accounts in a proper way, which will help in innovation, which will help in competitiveness in the industry, where you understand your margins better, your profitability better, and also it gives smaller and medium businesses a common play field for them to survive better, to get into the market better.
Well, I think we've got 2 mics. We can maybe pass one of those down, Aya or Mustafa, if you want to pass one. Yeah, Sahil, you want to? Oh, no, we. The man he wrote the book. Okay, Sahil, please.
I believe, as rightly mentioned by my fellow panelist, I think the top 3 challenges that a company can face is financial planning and budgeting. Maybe at the initial stage, it will be very difficult for them to budget the corporate tax assessment, right? That is a key factor to be considered over here. The next one, I believe, is the compliance complexity. Now, UAE has predominantly been in the tax-free regime. Now, moving from that regime to more rigorous tax-compliant regime will be more of a challenge and a complex scenario where the businesses will have to adopt the rigorous tax regime, which is definitely a challenging scenario. The third one being the operational adjustment. To incorporate the financial reporting and the compliance requirements into their internal controls and processes will definitely be a key challenge in the coming time.
So it might seem simplistic, but you're finding the cultural challenge of having to change business and suddenly think about tax and auditing is legitimately one of the biggest challenges.
Yes, I believe so. Absolutely.
And as we look towards again, more with some of these challenges, are businesses aware of the penalties or the charges that they may face? Because it's one thing to come in and say, 9% is coming in. How do we minimize it? Do we put it in someone else's name? How do we work around this? What are the situations? I can see, Nirav, the penalties for late payment or not lodging on time. Are we aware? Has the education program worked?
So first of all, FTA has been quite vocal that if you're going to delay your registration, you're going to be slapped with 10,000 worth of penalty. But we need to be mindful. There are 2 important things here. The penalties are already announced by cabinet decisions way back, right? It's already in the public domain. One needs to know there are administrative delays and there are penalties. More importantly, as you all know, in UAE, the tax avoidance is a criminal consequences. And owners of compliance is on a self-assessment basis, which means it is on the taxpayer. And if the taxpayer is not going to do the correct assessment, which leads to either tax minimization or tax avoidance, they potentially can go behind bars. And that's the very important fact that one needs to be very, very mindful of in this part of the world. Because most other part where you are used to or where you are from, tax violation does not become a criminal consequence. It's a civil offense. So you can fight, you can challenge, you can pay penalties and you can get around that. But here it has both. You'll anyway get slapped with interest and penalty, but you'll also get slapped with imprisonment. So this is something that one needs to be particularly mindful of.
Well, therefore, given there are those strict penalties, and I know this can be quite a complex topic, so we are opening this up, obviously, to questions. So if anyone does have a question, Gordon's roving around for you to raise your hand. Speaking of those penalties, the free zone corporate tax regime does offer a 0% corporate tax rate, so that is available. I'm interested on the thoughts. How does one qualify for that? And moreover, what is the benefit to the government to introduce certain zero tax interventions?
If I start discussing about how do you qualify for free zone, it will take another 2 hours.
Okay.
So we can't get into that side that
Yeah.
simply. But it's just that, okay, if you are a free zone person, you're qualifying, you're meeting certain conditions, and you are in one of the 13 qualifying activity, you can get a 0% rate. But be mindful that overall, the structure is such that not all will benefit. So the tagline now is the free zone is not free of taxes.
Okay. The free zone is not free of taxes. That's the tagline.
That's what one needs to remember very clearly.
So, Josefa, yeah, you wanted to comment on this? Is that mic not? We've got one in front of you, Mustafa, if we can pass this one down, or maybe if we can get another microphone up here. That one's working for you. Yeah, so just recapping this idea about the free zone corporate tax regime.
Yeah. As Mr. Nirav clearly mentioned, it's a completely different chapter. Free zone definitely is is allowing its companies to become 0% taxes, provided all their compliances are met. And trust me, the compliances have a big checklist to go through. So I believe anyone who is having a company in free zone needs to go with that eligibility criteria accurately and adhere to your consultants so that you understand well. Otherwise, there is a standard tax rate for you. And if you do not comply, and if you wrongly comply, then there are also penalties as discussed by Mr. Nirav earlier.
And then, yes, Salah, you would like to add something?
I will make it very easy. Is it working? Oh, okay. How many of you are having free zone companies?
So how many people here have free zone companies?
Oh, very
Okay,
few.
we've got a few hands, yes.
If you want to avail 0% tax scheme, first, you need to check you are in a free zone. Second thing, you need to have a arm's length transaction. That means all your transactions should be at the market rate. Third, you need to have audited financial accounts. Fourth, most important, don't forget, you have to meet the de minimis requirement. If you meet the de minimis requirement, then only you can avail the 0% tax regime. There are two types of activities for free zone person. One is qualifying activities, one is excluded activities. If you are doing the qualifying activities, then you can avail the scheme. But if you are doing the excluded activities, even then you can avail the 0% tax scheme. How? There are two portions of your revenue. One is your qualifying revenue, one is your non-qualifying revenue. Qualifying revenues are from free zone to free zone persons and from qualifying activities. And non-qualifying revenue part is from your excluded activities. If your non-qualifying part does not exceed 5% of total revenue or 5 million, whichever is lower, then all of your non-qualifying income will become qualifying income and you can avail 0% tax regime. However, if you are unable to meet any of the requirements, like you need to have adequate substance in the free zone, you need to have audited accounts, you need to maintain arm's length transaction. If you fail to do any of it, then you will be disqualified for next 5 years.
That's right. Okay. And when it comes down to that corporate, just on that, you mentioned, anyone here got any questions that's got a free zone? Because there's a tremendous opportunity here. We do have time for questions at the end. Sometimes there's also the other exemptions that make this program, but we get into those. I want to know, why does the government want to introduce free zone corporate tax regimes? What's the benefit to the government to have certain exemptions?
It's not about having benefits or not. There are two aspects. So one, all free zones have been marketing all these years that we are free of taxes. We have 50-year holiday, we have 30-year holiday, and so on and so forth. So when government brought in the tax, which is a federal level, and it overrides most of this free zone decrease, it at least provides a mechanism whereby some of them gets the benefit, if not all, if they meet that condition. So at least in some ways, government is trying to be true to their words that you get tax benefits by being in the free zone. But it's not across the board, and it's not for everyone. And that's the main rationale.
Yeah, thank you. And also, Mustafa, on that, there's also the option of small business relief. If businesses have a tax period that doesn't exceed 3 million dirhams, how can someone apply for that CT exemption or any exemption?
Yes, let me add only one thing about what's the benefit of having...
The benefit for government for zero tax, yes.
Yes, just I want to add one thing. Definitely there is indirect benefits for the country where they are attracting the investors here, coming here. And one more thing, the voice okay? It's fine, there is no echo. Okay, and transfer of knowledge, of course, because indirectly all the investors will bring the employees, bring technologies, what will benefit indirectly to the country. So this is one of the things which is very important as well for attracting the investors over here. Going back to your question about the small business.
Small business, yes.
Yes. If the company is making revenue less than 3 million dirhams, they are going to benefit from zero tax, but they need to maintain a proper box and financial statements in-house, just to prove this. Yeah.
Yes. Okay. So,
okay.
yeah.
It.
No. Thank you. Thank you very much, Mustafa. Again, any questions from anyone? Because I've got some important questions I want to go to before we find Gordon. We've got one question here. In the meantime, while we get the mic ready, Alaya, we know the rate is one of the lowest of the GCC member states of 9%. The global average is 23%. Do you foresee there any change in the future of the UAE? This is the bumping it up from 9%. Do you have any thoughts on where that could go? See if Mustafa can get you on. There we go.
The question is, there will
9%.
be a change.
We've got 9% tax. The global average is 23.
Mr.
Can you foresee it rising in the future?
There are only two things certain in this world, death and taxes. So UAE has already implemented 9% tax, okay, which is the lowest in the GCC, and which is the globally average lowest 23%. And most likely, that 9% was implemented to maintain and retain the foreign investors. For MNEs, yes, from next year, they will be charged 15%. But I don't think so. For other companies, it will be increased from 9%. Because, see, according to Mars intelligence report, corporate tax regime was rolled out in June 2023. And it says that it holds the potential to generate revenue of 47.7 billion AED, equivalent to 13 billion USD. That will be 15% of gross non-oil-based revenue for the UAE. So we have to see the figures. And first year has not been completed yet. And we are expecting 47.7 billion AED. So I don't think so. It's ahead of time to say that they will increase from 9% so quickly. Let's see what happens, future unfolds.
Sahil, we haven't heard from you. What are your thoughts? Do you agree? 9%, is it capped? Will it increase?
No, I truly believe to what she mentioned. I believe we just kick-started, and to begin with, I think it's a fair, reasonable rate that we have implemented. Going forward, I think it moreover depends on the economic condition, the competitiveness in the global environment, how UAE is placed. So I think these are the two factors which will be looked forward to by UAE in coming time.
Over the next couple of years. The gentleman with the question. Yes, please.
Yes. My question is that as UAE is the trading hub, then a lot of companies are operating for the trading business mainly over here. What are the exemptions available in the corporate tax of the high sea trading?
Okay, so other forms of exemptions.
Yes, and then I come to heard that there is some exemption that zero rated can be done for the high sea trading.
High security?
High sea trading.
Hyson. Okay, yes.
Okay, yeah, I will say that. Only the companies which are incorporated in designated zone, they can benefit from high sea sales, or you can say drop shipment. In that case, you buy from one country, from a manufacturer, and you sell it to another country. That should be a retailer or distributor. It should not be an end user. If you are buying from country A and the goods do not pass through UAE, that is from the designated zone, even then you qualify for 0% tax regime.
Just a continuation of that, if there is a company which is doing high sea trading, plus they are having businesses in the mainland also, they will qualify that one or no?
Yes, there are 4 criteria from designated zone for trading business, distribution businesses. Number 1 is the high sea sales. Number 2 is that if you have a company in designated zone and you buy goods from a mainland manufacturer and you sold those goods outside the UAE, GCC or abroad, means export, but that sale should be also to a retailer or distributor, not end user. Then you will qualify for 0% tax regime. Third criteria is that you are a distributor company incorporated in a designated zone and you import goods abroad from inside the designated zone, and then from designated zone you sell those goods to a distributor or retailer in the mainland, then it will also qualify for 0% tax regime. And the 4th criteria is that you buy goods from a mainland, you are a company incorporated in designated zone or distribution company, you buy goods from mainland manufacturer and then you sell those goods directly to another mainland company without passing through the designated zone, but the buyer, the seller whom you are selling should not be end user. In that case also, you will qualify 0% tax regime. Thank you.
Sir, I'll just simplify it for you. So, under VAT, your transit, your movement of goods, where it is coming from, where it is going, is relevant for VAT to be charged. Corporate tax is on the taxpayer. So, whether you are doing high sea trading, you're doing local trading, or you're doing something else, if the taxpayer is meeting certain set of defined conditions, you get tax benefit. Otherwise, you don't get. You know? So, whatever she mentioned are the conditions for distribution business located in a designated zone. There is also another category where if you are dealing in qualifying commodities and you do high sea trade, but those commodities are the one which are traded on commodity exchanges and only the raw form. So only some of them qualify. So it's not blanket that if you are in high sea means everything is exempt. No. It doesn't link to what kind of business you do. It links to whether you as a taxpayer meet the defined criteria and the condition, then you get benefit. Otherwise you don't get.
And I would like to just add something back here, that you need to make sure that all your criteria are met throughout the year. So whatever the eligibility criteria of being a qualified free zone person is there, it cannot happen that you are only 11 months in your financial period adhering to it and 1 month you have not been adhering to it. So if that criteria is not met in full, then you will be disqualified and you will be barred for next 5 years to enter into a qualified free zone entity.
So just last thing is that one, that are the regulations which you are talking about the full and final, or we expect some more regulations to come on this one? Because once we make a decision, we are already in the middle of 2024 and 2025 we have filed. I have 2-3 companies which we are doing the trading, business over there. So do you think that this is the full and final, or that we expect some more clarification or changes in the law? Thanks.
Guidance will always follow because business situations are always complex. So that's why we have something called private clarification and public clarification with FTA. So I would say that definitely the more and more guidance will flow, more and more clarification from the FTA will flow. But as the law has been defined, it is going to stay. Definitely FTA is to comment more on that what additions can come further in the law. But I think law is there as a whole. The only thing what we need to look for is more and more clarifications on each different sector.
Thank you for those questions. Any more and they'll invoice you. So we have to make sure. It's a popular one and we are running short. I think Gordon, just over. Man in the purple tie wants to be asking a question.
Hello, assalamu alaikum everyone. My question is that in continuity of this question, like we have spoken for the free zones. Now, if the company is in mainland and they are doing high sales, high sea sales, like if company is registered in the mainland and they are exporting something, they are purchasing something from America and exporting to Africa, just a switch BL. The funds are coming in UAE. So how we deal with those transactions? Is it like in VAT it's out of scope, but how to deal with the corporate tax?
You have to report and pay tax on it.
Sorry?
You have to report that and pay tax on it.
The criteria of 0% is only for the free zone company. So if you are a mainland company, then it doesn't apply to you at all.
See, there is a confusion. A lot of people confuse VAT with corporate tax. That's the main thing. Because VAT was initially implemented in 2018. Yeah. And VAT is linked with threshold. If you meet the threshold of 375,000, then you get registered. But corporate is not linked with threshold. You don't need to register if you meet a certain threshold. Even if you don't have any activity, if you don't have any bank account, you just have a trade license, you get to get yourself registered. And VAT export was 0%. But in corporate tax, taxable persons, worldwide income is taxable. It depends on otherwise slab. If you exceed 375,000, then the excess amount will be subject to 9% for mainland companies.
Thank you. We've got time for one more question. Anyone else we'll have to go to the first hand up. No, down the front here. We'll see if Gordon can come round. Yes, please.
Thank you. Yeah. So my question is to Mr. Nirav Shah. On a foundation, as you're familiar, the DIFC or ADGM-based foundations, what is the recent stand on this in terms of the taxability of it, and how is a foundation classified? Is it classified as a corporate entity, or I'm aware that there is an exemption that can be taken to treat it as a transparent this. So if you have any thoughts on this, please. Thanks.
Thank you for that. That's a very interesting question. Foundation is a special vehicle, which is a corporate entity, but it is accorded a status of a pass-through under the tax laws. And therefore, if the founder are individuals, all the income of the foundation will be treated as if it is an individual's income. It's an excellent tool in the current time to do your succession planning, your asset protection, and all of that through the foundation mechanism. And of course, some of the things are not 100% clear, but it's definitely something which is currently hugely in demand. If you just ask DIFC or ADGM, the number of foundations they did last year and number of foundations they did this year, the numbers have actually doubled. So it's people are using it, families are using that to park their assets into the foundation and still get a tax treatment which is applicable to an individual. So it's definitely an advantageous position.
There was one more question we can go to that was down the back. Gordon, I think we've had a fantastic panel up here about corporate tax. We do have a fireside chat, and then that will follow with another corporate tax, continuing on in more detail, coming up at around about 2:30. Question?
Yeah, so if you have a foreign company and they have a branch in UAE, so how do you register and pay tax, and what income you pay tax on?
Yeah, so a foreign company, they've got a branch in the UAE in terms of tax. Anyone wish to speak on this?
Once you have registered a branch here and you get a license, that branch is subject to tax like any other resident juridical person. You define that parent is, of course, the foreign company, and you register accordingly. And the branch accounts that you maintain here is the one that will be based for your corporate tax compliance purposes as well. If you are actually in the free zone, you'll have to get it audited and go on and so forth, if you are meeting those requirements. If you are in the mainland or anywhere else, then the audit criteria will apply as per any other company here. So yes, you need to register and comply.
Can I add something?
Lastly, yes, quickly, Josefa.
Yeah. So in this case, you will also get an advantage of your foreign tax credit. You being a branch of an M&E or other company, whatever tax you pay in UAE, and if you have a DTA, which is double taxation avoidance agreement with that country, then you will be able to take the advantage of the tax credit what you have paid in the country. So this could also help.
Yeah, but it's other way around. The parent will take the tax credit.
So they
not
can
the
use
branch.
as well as a tax
And
credit in that country.
You don't even need a treaty for that.
Look, unfortunately, unless we wrap this up, we're going to continue to talk well into the night. So we need to thank our panellists because this has been a fascinating topic. Nirav Shah, the Director of Fame Advisory. Sahil Mehta, the CEO of Shura Tax Consultants. Mustafa El Rafay, the General Manager of Integrity Accounting Services. Alaya Noor, the Tax Genie, as we can call you with your three wishes, the Associate Partner of Ahmed Al Agabaya Chartered Accountants, and Josefa Saifuddin, the Co-Founder and CEO of the Brooks Group. Could we give them a round of applause, please?